What's up, FIRESTARTers? This is Mirthy, and you're on MirthyMoney. And today we're going to be talking about how to run the numbers on potential income properties. Now, we're going to be analyzing a property by the numbers to see if it's a good investment. There are a couple easy steps before you do all this that will help you narrow down your choices. And I'll probably be releasing a post about that. But right now, this seems to be a sought-after bit of info, so I'm hitting this first. Now, this should be done before you even go see the place in person. Don't even waste your time on a place if the numbers don't work. You might end up getting talked into the property because the agent or, by your own eyes. So let's just drop right in, and the first thing we're going to talk about is comps. Okay, comps or comparable or comparable properties, whatever you want to call it, is what people look at for two things. You want to check the area that your potential property is in to see what other people are buying and renting the similar properties for. This helps you see if you are paying under what the market value is, which is what you want, and also how much you can realistically potentially charge for rent. For each property in question, you can find the comparable rent income in the area. For this example, we'll just say it's $2,300 a month. Pause. Hashtag that's how much I pay on one of my properties. So it's definitely a possible number, at least in my area. And that is an amazing thing. So I want you to just pause and hit that like button if you so choose. Let's continue. Now, with that, you can calculate your possible gross income. This is your total income before expenses. So you take your monthly rent and multiply that by 12. So for this example, $27,600 per year is how much money you can make, gross. Then you estimate your fixed expenses. This includes mortgage payments, property taxes, insurance payments, and HOA fees, property manager fees, repair savings, vacancy savings, capital expenses savings, and anything else that you might think of. Some of these are really up to you and how safe you want to be. For things like capital expenses and savings and vacancy prep and repair savings, there are tons of sources online. Paula Pants, Graham Stephan, and Bigger Pockets that recommend their thoughts on those amounts. It also depends on if you're going to be using a property management or managing it yourself. To be safe, I like to just say it's going to be like $100 for each category. So the other things like HOA fees, insurances, property taxes, and mortgage payments usually can be found fairly close estimates on the listing sites. But you can also do your own stuff with mortgagecalculator.com, things like that. Or if you just know the area really well, which you'll get to know after a while of getting into the business. So for our example, let's say our mortgage tax and insurance fee is going to be $1,550, and then the HOA is $268. Capital expenses, savings, vacancies, repairs, $400. So altogether that comes to $2,218 per month in expenses. Now we tie it all together and figure out if this property is worth it in terms of being a rental. Because why figure out if the sale is a good deal if the earning potential is a no-go? So you use your monthly numbers first. This equation will tell you if your monthly net income or after expense income, or you can just call it cash flow. All right, so we're just going to take our monthly gross income minus our fixed expenses, and that's going to be your monthly net income. So $2,300 minus our $2,218, we are cash flowing $82. Not too bad, kind of on the low side. It depends on what you, for yourself, have marked as a worth it number. I've heard some people are cool with making $100 cash flow to $300. Obviously, anything more than that is desirable. But, it doesn't have to be bringing in thousands, to be a good deal. A couple $100, after all the savings and all that, that's good, So if you want to get your annual projections, obviously you just multiply by 12. That's going to be your annual net income. So for our example, that comes out to be $984 in a year, as your earnings, your cash flow. So could be better. Let's see. The next thing we're going to go through is a return on investment. Okay, so you want to know is, let's say you already figured out how much you can earn, but what's this property altogether going to net you back? So to find your cash on cash ROI, which is something that we really like to see, it just lets us know if we're going down the right path. So you have your annual net income. We need to collect some numbers for this equation. We got to know how much we're going to put down. So if you can just estimate 20% or whatever you're planning for your situation. Closing costs was usually about 1% of the sale price. And renovation costs, if you plan any of that, you can estimate these from pictures or by doing a walkthrough with a contractor to get a rough estimate. Or if you're experienced, just do the walkthrough yourself. And always add in about 20% cost to the reno budget, because things happen and it's better to expect the unexpected, so to speak. So you add all those together and then see how they work. So you're going to divide the annual earnings, right, the ANI, which was $984, and you're going to divide that number by all those numbers that we just got. So in this case, I'm just going to estimate $25,000 for our down payment, $2,000 for closing costs, and $5,000 for renovation. Okay, it's $32,000. So $984 divided by $32,000. Then you multiply that by $100 or 100. Sorry, that will make it into a percentage. So your cash on cash ROI becomes 3.075%. Your goal really is to get between 6% and 10% or more to really have a solid deal. So while you're making money with this deal, it wouldn't be the ideal choice. You'd be better off continuing the search. Another even farther way to take it is to find your complete ROI that includes equity growth. Many people don't like to consider equity as income, but it definitely counts towards your net worth and shouldn't be ignored. To find out your ROI, including the equity, use this next equation. Okay, you're just gonna basically add in the amount of principal paid annually at the beginning of the equation. You can get that from mortgagecalculator.com. Right after you plug in all your info, it comes out right at the top of the little bar graph. It's the same as the ROI calculation, like I said, other than adding that at the beginning. So for this example, we're paying $12,000 a year to the principal, right? And the other, whatever, 500 something per month is going to your interest or whatever, right? So in this scenario, you're way down the line here. So, because there's a amortization and all that. But so basically it's 12,000, right? Plus 984 divided by 32,000 times 100. And that comes out to be 40.57%. Now that number looks pretty nice. Maybe you should count the equity more often, right? But don't neglect your cash flow, because that can make sure your income property business keeps going. Alright guys, if you're here with me on YouTube or Patreon, be sure to check out the description below and follow me on my social media. Say hi. I won't bite. I'll answer all your comments and questions and all that. And there's a ton of cool stuff down there, like free stocks on Robinhood and WeBull and, free stocks. Come on. Who's not going to take that? As well as those, though, there's also my 5 favorite books right now. Some of them are on rental investing. Some of them are things that have to do with business or just regular stock investing. A lot of mindset books. Those are some of my favorite things to do in my pastime. But without further ado, I will let you go to the outro. Thanks for joining me today. Now that was how to run the numbers on a potential income property, You can take these equations, take my numbers out, put your numbers in, and you can find these numbers for yourself. If you want more knowledge on any of the subjects regarding FIRE, retirement, investing, real estate, credit cards, travel, budgeting, frugality, saving money, earning more money, financial tools and gadgets, then be sure to follow MirthyMoney.com or keep listening on the SoundCloud account and subscribe to the YouTube channel. And keep it up, Firestarters.